Today, big tech stocks sell off, setting up the Nasdaq for an ugly start to the month. Plus, the crypto trade charges higher as Ethereum powers to a new record high. And finally, Bill and Melinda Gates split after 27 years. We take a look at what this may mean for their multi-billion-dollar philanthropic foundation. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks finished mixed. The Dow managed to turn positive in the last moment of trading, after spending the entire day in negative territory. The biggest loser was the Nasdaq, handing in its worst day since March amid heavy selling in big tech names. Apple, Amazon, Facebook, and Microsoft all fell lower today. As far as a reason for the weakness, strategists cited a mix of concerns about rising inflation, potential for tax increases, and fears that the Federal Reserve may begin to wind down part of its accommodative policy. But not everything was red today. Cryptocurrency Ether hit an all-time high, breaking through the $3,500 price level. Ether has more than quadrupled this year as interest in cryptocurrencies exploded. But it differs in important ways from its cousin Bitcoin. Kate Rooney explains.
So Bitcoin's got a little bit more competition in the crypto market. The second largest cryptocurrency, known as Ethereum, it's also called Ether, hit an all-time high this week. Actually, this morning it rose above $3,500. It's up something like 20% this week. Bitcoin is pretty much flat. It's seen as sort of the smaller but potentially more useful cryptocurrency compared to Bitcoin. Ethereum is often described as digital oil when Bitcoin is described as digital gold. So the idea, if you had a block of gold and a barrel of oil, the oil is probably more useful. The way that it works, Ethereum is a blockchain. It's a network, it's a decentralized network. Ethereum, or Ether, the cryptocurrency, is what people use as payment on that network. So they say that's where the oil analogy comes from. It's used on that network to power things like NFTs, decentralized apps, which are also known as dApps, if you need another buzzword. But it is really seen as part of what's powering some of this network that has become so popular during the NFT boom, especially. So for a lot of crypto believers, the ideal future is a world where all of the apps that we think of now, whether it's in finance or gaming, are decentralized. So there's no central authority. The idea for Ethereum and the cryptocurrency is that as those networks become more popular, as people start to use them more, that cryptocurrency will become more valuable, it'll be used more often, and therefore the price, analysts say, should go up in tandem with that. If you compare it to most of the other cryptocurrencies, Ethereum is way ahead in terms of actually being a use case, a form of payment already being used on this network. If you compare that to something like Dogecoin, which really started as a joke but is now being accepted as a mainstream form of payment. The Oakland A's said today they were going to start accepting Dogecoin for tickets. Other cryptocurrencies have a long way to catch up to becoming sort of the oil equivalent, or actually a real use case. The other thing I would point out about Ethereum, Bitcoin and Ethereum are the only two cryptocurrencies that have been designated as commodities. So they're regulated by the CFTC. And therefore, in the eyes of regulators, they've sort of figured out Ethereum. They've put it in a bucket with Bitcoin. And there aren't a lot of regulatory questions, whereas a lot of the other smaller cryptocurrencies that are new may still have some hurdles when it comes to how US regulators view those.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
The asset purchases are over the top. We're not in full employment, but the asset purchases are not the thing that's going to get us there. The vaccines are what's going to get us closer to full employment. The Fed knows it. The Treasury knows it. Yellen knows it. She sat in both seats. So this is what the market's going to look like the first few times we start hearing people talk less accommodatively. You're seeing most of the damage today in the digital economy, not the physical economy, and the highest valuated growth stocks.
We do expect that the booster likely will be needed somewhere between 6 and 12 months. And this is based on all the evidence that we have seen collectively, but remains to be proven. And those evidence are based on people that they have COVID-19 vaccine, after 6 months that they had the disease, the number of people that get reinfection is getting higher.
The App Store, Tim Cook likes to use the phrase economic miracle. And we've created, hundreds of billions of dollars of value. And all of these app developers, they're businesses that they wouldn't exist without the App Store. And that is a thriving market. And I think they even use a phrase similar to that is what, an antitrust regulator dreams of. And Epic's argument is that Apple's own iPhone, its own product, is a monopoly.
We'll have 3 days of pretrial motions as the government and the defense sort of stake out their positions ahead of that trial. So we'll hear today on whether Holmes will be able to do what the government says is blaming her victims, that is, suggesting that these were sophisticated investors in Theranos, the startup blood testing firm, and they should have known the difference between Silicon Valley puffery and material information. What can the government introduce in terms of impact on victims from things like false tests? And what about whether the company violated industry standards or government regulations, neither of which Holmes is charged with?
Okay, so late yesterday afternoon, Bill Gates tweeted a statement announcing his divorce from wife of 27 years and philanthropic partner Melinda Gates. As one of the richest men in the world, Bill Gates' divorce may have extensive implications for the couple's many assets and their shared foundation. Our wealth editor, Robert Frank, broke it all down for us.
The 3 richest men in America are now all divorced. First, you had Elon Musk. He's on his 3rd, I think. Then in 2019, you had Jeff Bezos getting divorced, and now Bill Gates. But even by billionaire divorce standards, Bill and Melinda Gates' divorce is very complicated. On the one hand, you've got Microsoft stock, which is only a small part of their assets. He owns about 1.4% of the company, about $26 billion. Most of their wealth, though, is in a private investment company called Cascade Investments. This is a giant empire of public and private companies. It includes everything from the Four Seasons Hotel to the largest amount of farmland in the country. They also own dozens of publicly traded companies. So sorting through that will be very complicated. Now, the couple did file a separation agreement in the Washington County Court. That means that basically they've decided how to divide their assets. Maybe they haven't done it yet, or at least they've decided on a process. We don't know what those details are, but in Washington State, which is a community property state, half of all the assets that they have acquired during their marriage could be equally distributed. But the big catch here, what makes this divorce so different and so problematic from a business and financial point of view, is their foundation. The Bill and Melinda Gates Foundation has net assets of about $50 billion. They spend or give away $5 billion a year. That's as much as many governments spend on their important causes of healthcare, education, and the environment. The foundation is a separate entity. It's not considered a marital asset. So it's not like it can be split apart. It's not like it's theirs anymore. They give that money away. That charity is then a separate entity. But they run it together, and they've said in a statement that they will continue to run and decide where that money goes in their foundation together and coordinate. But experts tell me that is going to be really difficult now that you're divorced to decide together on what to fund, how much to fund, and when to fund it. The other big question and unknown here is they have pledged to give 95% of their fortune to charity. They have about $130 billion in family wealth, so that leaves $120 billion yet to be given away that's pledged to charity, but has not been given either to the foundation or any other foundation. And what this divorce raises is a big question around where that money will go, and also money that was going to go into the Bill and Melinda Gates Foundation, like from Warren Buffett, does he continue to give? So a lot of money now thrown into question, and a lot of money still in doubt as to who will get it and what charities will be funded.
Before we go, let's get to our numbers round. We'll start with 22. 22% of parents either stopped working or worked less in 2020 as a result of pandemic disruptions to childcare or schooling, according to Federal Reserve Chair Jay Powell, who cited results from a survey that the central bank will release later this month. He went on to say that the percentage rises to 36% and 30% for Black and Hispanic mothers, respectively. Powell cited these figures while speaking to the National Community Reinvestment Coalition, which is a fair lending advocacy group. Next, 10. Bank of America's retail clients have been net buyers of U.S. stocks for 10 straight weeks. They're also the only group to buy stocks for the past 3 weeks in a row. Now, remember, retail investors are individual investors like you and me, not the professional guys. And while the regular folks were buying, the pros have been selling. In the same research note, Bank of America said that its institutional clients have been selling stocks for 3 straight weeks, and hedge funds were sellers for 5 weeks in a row. In fact, the bank used the term extreme selling to describe hedge fund behavior and warned that the stock market is approaching euphoria status. And finally, 2011. Newly revealed emails between Steve Jobs and his fellow Apple executives show the company's conflict with Facebook goes back as far as 2011. The emails came to light during the ongoing trial between Apple and Epic Games. Now, the gaming developer, which makes the wildly popular Fortnite, wants to force Apple to open up iPhone software distribution instead of demanding that all app developers put their products in the App Store, where Apple takes a 30% cut of all revenue. The 2011 emails showed Jobs and his deputies battling with Facebook over App Store rules, which could explain why the social network took more than a year to put out an app for the iPad, which was first released in 2010. Of course, the Facebook-Apple feud exists to this day. There was the months-long fight over the new iPhone update, but Facebook still has App Store complaints. This past August, the company said Apple's rules were hampering it from releasing its new Facebook gaming app the way that it wanted to. We're following the entire Apple Epic trial very closely. Get all our coverage by going to CNBC.com and downloading the CNBC app. And that's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.